The Reserve Bank Governor Philip Lowe has warned inflation will be more variable over the years ahead as our economy deals with supply shocks and higher interest rates. Joining me now is our business reporter, Edward Boyd. Ed, there was a lot riding on this speech. Governor Lowe's words are like bullets at the moment. He also warned that interest rates will continue to rise into next year.
Yeah, at the end of his speech, he talked about monetary policy, and specifically he said, look, the cash rate's gone up substantially this year. It's currently at 2.85%, and the RBA is intending to raise rates in the future. So what that basically means is we can expect the cash rate to go up by 0.25% next month for the December board meeting, and then likely next year as well. The governor also talked about how they're considering raising rates by 50 basis points at each of these upcoming meetings, so it may not even be 0.25%. They're not taking that 0.5% cash rate increase off the table. The other thing, Laura, that the governor talked about last night at the Cedar event in Melbourne was supply shocks hitting our economy are going to become more frequent. So a supply shock is when a certain product goes up or down in supply. So that we've had a shortage of computer chips, for example, over the last couple of years in Australia, and that's pushed up the price of new and used vehicles. So these supply shocks are going to become more frequent, and they're going to have big impacts on inflation going forward.
So all four of these supply side developments, deglobalisation, changing demographics, climate change and the transition in our energy systems, are first order issues that are likely to affect many businesses in this room. They're also likely to affect the inflation dynamics in the global economy and here in Australia. I think we'll see more variable inflation.
Sorry, Ed, I tried to interrupt the governor there, but let's talk about these supply side shocks as well. Did he give any indication about how the RBA will view these? Of course, they're inflationary. It will put further pressure on inflation. But when the RBA is considering pushing rates up, is it going to look through these supply side shocks?
He basically talked about how Australians can expect not only inflation to be more volatile in the years ahead, but also the cash rate will be more volatile going forward too. So, over the past couple of years, we've seen the cash rate fall substantially, be at a record low, and now it's on its way back up. But before that, going back to 10 years ago, the cash rate was pretty stable. And we're not really going to see that happen again. So as we deal with more and more supply shocks as they come through into our economy, obviously there's a war in Ukraine at the moment that's been pushing up energy prices. Now they're coming back down. Now they're going back up again. The governor of the Reserve Bank is going to need to take action with the cash rate and use that more regularly. So we can expect the cash rate to bounce around and inflation to bounce around in the future.
Hopefully that doesn't mean always up. But anyway, the federal government is considering changes to IR laws. We all know that. It's a big debate in Canberra at the moment. The RBA has talked up the benefits of a flexible labour market. So what does that mean? Is there comment there on the government's proposed changes?
Look, I've gone through the speech pretty closely, and there's a couple of lines towards the back third of the speech where he talks very briefly about this flexible labour market that Australia needs. So, for example, if there's a certain product goes out of supply in Australia, employers may be able to quickly hire people, bring them on and fill up that gap in the economy. So he basically talked about the need for labour being more flexible. So, and conversely, if there's something that's in too much of a supply here, employers should be able to back off quickly and potentially let a lot of people go to deal with that shock as well. So that was kind of what the governor was getting at when he talked about flexible labour conditions for our economy, improving our economy going forward.